Today is Thursday, August 20th. This is the end of day review for the live trading room here at Options Moneymaker. We profile the new cycle trading adaptive entry system every single day in the live trading room. And we help guide a community of traders through understanding the signals, the strength of the signals, some of the fine nuances of the signals. But here's a great snapshot of today. We've been in pretty much a rising bias all day long, and we can see very clearly that it started at 9:40 this morning. So that second blue bar right here at 9:40 indicates that we ought to go long. So when I say long, we're talking about the NASDAQ 100 futures. This adaptive entry system works on any stock, works on any index, works on options, but we trade the NASDAQ 100 futures in order to kind of profile how the signals work, and then people can trade whatever they choose using the same methodology on their own index or underlying derivative. This second blue bar indicates that it's time for us to go long. So we go long, and you can see that basically we were in a rising bias all day long. We had a little bit of an interruption right here. We actually had a couple of signals that allow us to take some profits on this retracement, small retracement, and then basically stayed long all day. That 940 bar opened at 11,316 and a quarter, and right now, as of 15 minutes before market close, we've traded up to a high of 11,496.50. So from 316 to 496, 180 points. That's a pretty solid day. Now, all of these signals that you see along the way were opportunities for us to enter the trend, take a profit from a minor retracement in the trend, re-enter the trend, continue in the trend, and take advantage of some of the other retracements that we saw. So the adaptive entry system is a very simple, user-friendly system, very easy to identify. It's basically, these labels are all indicating momentum signals, consensus signals, trend signals, continuation signals, green long, red short. It's really that simple. If you're trading futures, you go green long, you go red short. That is as simple as it can be. So what we do here at the end of the live trading room is we summarize performance for the day. And today is August 20th. I'm going to try to scroll back here so you can see from 7 a.m. forward. Here's the start. We measure from 7 a.m. on. We measure prior to that, but in the room here, at the end of the day, I'm profiling performance from 7 a.m. on. So there's the 710. That's the first entry after 7 o'clock. And then that takes us up to where we are right now. All right, so we're going to look at the daily summary. The daily summary categorizes two different ways of trading. In fact, I'm going to jump over to the averages to show that. There's all sorts of different ways to slice and dice performance within the adaptive entry system. You might want to take all of the signals. You might want to take only momentum signals. You might want to take only trend signals. You might want to only take consensus signals. It's entirely up to you to decide. But what we do is we track all of the data so that you can have a reasonable idea of how any one of those signals or combinations of signals is performing. And then we also track various start times and ending times. So the two primary categories that I track, I track them all, but the two primary categories that I focus on then for the purpose of demonstrating how any trader can build a financial forecast for their trading business are the all signals. That's taking any one of the four signals that's produced by the adaptive entry system and trading it from 9:30 to noon, because that allows for people who have a limited amount of time to trade to focus on that time frame and understand how well they could perform. The other category that we track and trade is starting at 7 o'clock Eastern and trading until 4 p.m. Eastern, the trend, bias, and continuation signals only, not trading consensus, not trading momentum. And that's from 7 to 4. So when I look at the daily summary and I look at the 9:30 to 12 category trading all signals, we managed to knock out 29 points today. Now, if you're not familiar with the NASDAQ futures, NASDAQ 100 futures has a value of $20 per point. So at 29 points, that's going to be $580. So we're going to take that number and we're going to go over to our personal trading plan, and we're going to go to the LTR all, that's all signals, 9:30 to noon, and we're going to go down to today's date, Thursday, August 20th. We're going to go to our data entry field, which there's only 2 data entry fields that you really need to enter at the close of your trading every day. The first one is, what was the profit? What was the gross profit? So $580, that's how much profit there was per contract, and we're trading 3 contracts. So there's $1,740 of profit. There were 8 trades, 3 contracts per trade, and so there were 24 contracts. So we come back over here now. Let's see here. We come back over here and we take a look at what our actual performance is now. So what we continually do is enter our performance, our live performance at the end of every day, and then we look at, so what is that as an overall average? We have winning days, we have losing days. We plan for winning days and we plan for losing days. Our plan in this personal trading plan forecast is to, on an average, win 4 days out of every 5 and lose 1 day out of every 5. So that's the plan. You may actually have better performance than that plan, or you may have less favorable performance than that plan. But that is the plan, and you can adjust it as we go. Now that we've plugged in our daily performance for today, there are a couple things that are very important for you to focus on. The first is, what is your average performance for your winning trades? What's the average performance for your winning trades? In our case, it's 27.79 points a day, 27.79 points a day. In this field right here, we are going to enter what our future forecast is. So everything highlighted in blue has been completed. This is a 12-month, 52-week forecast. And so now we have about 7.5 weeks behind us. So we are now forecasting, what about the balance of the 52 weeks? What do we expect to produce during those weeks? And we want it to be based on what our actual run rate is. So here we go, 27.8 points is right on, spot on what our actual run rate is, so I'm going to leave that alone. Our average losing day is 15.62, and we have our future forecast planned at 15.6. So our future forecast numbers are tied perfectly to the actual run rate that we have established in trading. Okay, so that is the most important part for you to review after you've entered your performance data for today, your profits or losses for today. And once you have that in, it's saying that the forecast for a 12-month period could potentially earn $290,000. Okay, and that's starting with $5,000. So that's a very reasonable amount, because I mean, it seems excessive, but it's very reasonable because we're just simply using math. We're using the math and science of the adaptive entry system and the projected income, projected total profits that we can achieve if we continue to operate at this particular run rate. Okay, we're factoring in both profits and losses. One other factor, those of you who have listened in before understand this, but this is a variable that you can adjust right here. We have the personal trading plan set up to say the number of contracts that you trade is going to be based on no more than 10% of the value of your account. Each contract at the broker that we trade at, Infinity Futures, requires $500 of margin. So in order for me to trade 3 contracts, which is $1,500 a margin, I need $15,000 in the account in order to satisfy the no more than 10%. Okay, so that number would continue to grow if we didn't put some sort of a limit on it. In this case, we've put a limit of 3 contracts on it. But it can be whatever you choose because it will never be more than 10% of the value of your account. So if you're looking for about a $290,000 income over the course of a year, and you're comfortable with your point production, your profit production, and your combination of profits and losses, and you have a reasonable forecast based on actual run rates, then you have the freedom to adjust that maximum number of contracts to whatever you prefer. If you decided you wanted to make it 5 contracts, it's going to dramatically increase the potential income. Now, I'm emphasizing potential because there's no guarantee of this. You may hit a streak of trading that you have more losses than you planned for. You may hit a streak of trading where you have no losses for a period of time. And so it's really important that you maintain the future forecast at or very close to the current run rate on both the average of your winning trades and the average of your losing trades. And then also just make sure that the average of your losing trades, although that's an average across all the trades, you want to make sure that your average number of losing days is really not significantly exceeding the planned forecast of an average of 1 losing trade per week. So I'm really comfortable with this number here. 290,000 is the forecast right now based on 3 contracts. So we're going to just save that, and now we're done with that for the day. If you were updating this yourself, it would take you literally 5 minutes to update the information, review the profit run rate, review the loss run rate, update your forecast, and then every single day you have a reasonable idea, reasonable expectation of what your income could be over the course of a 12-month period. So the second category we're going to enter in here is our trend bias trades only from 7 to 4. We look at 2 different variations. I could track all of them, but this simplifies it to show and demonstrate how you should be using your personal trading plan. And in that category, we took 53 points of profit. So 53 points, it's $20 of profit per point. So 53 times 20. So that's $1,060, 12 trades, $1,060. And we are trading 3 contracts. So we're going to put 1,060 times 3, $3,180. And we're trading 12 contracts, so that's 12 trades, 3 contracts a trade, so it's 36 contracts. By entering in the number of contracts, you're factoring in your cost of doing business. You're entering in your cost of trading. So the net profit today ends up being $3,036, an average of 16.87 points. So now we go up to the top. We're going to do our work here. We are forecasting our future forecast beyond what our actual is so far. Our actual run rate, we're forecasting at 36.10 points. We're actually averaging 33.8, 33.84. So I'm going to lower my future forecast to 33.8. I want to, every single day, keep it as closely aligned to the actual run rate I have achieved, and so that by the end of 12 months, I have a reasonable number, reasonable expectation of what I should be making. Then the 15.4, we haven't had any additional losing trades since the last time we updated that, so we're going to leave that alone. And then I'm going to put this, I was playing around with this, I'm going to put this back to 3 contracts. And we're going to cap out at 3 contracts. That will be no more than 3 or no more than 10% of the balance of my account, whichever is greater. So, sorry, no, whichever is the lesser of the 2. So if I change this to, let's say, 6 contracts, and I scroll down, I can see that 6 contracts starts to kick in down here. And that means that in order to trade 6 contracts, at $500 per contract of margin, I need $3,000, which means I need $30,000 in the account to trade 6 contracts. So by this limitation of 10% of the balance of the account and this maximum governor and the maximum number of contracts, those two things working together provides for a reasonably conservative expectation. And of course, this number right here, the maximum number of contracts, is the variable that you can really work with to either increase your profit expectations or decrease your overall risk. As the account grows, if you stay static at the same number of contracts, your overall risk is going to decrease. So it depends on what you desire personally as a trader. At this current run rate, trading from 7 to 4, trend bias and continuation trades only, none of the other signals, the forecast for a 12-month period is $376,147. And then this yellow box, I get asked about this periodically. Today is August 20th. If I went out, let's say 2 months to 10/20, it gives me an idea of what the balance of the account could be in 2 months. You can put whatever date you want in there. And the reason for that little feature there is because over here there is a column which allows you to add or delete funds. Well, you may not want to wait for 12 months to take out some money for living, enjoying, spending, giving, whatever you choose to do. So you would just anticipate what your available balance would be, decide what you want to take out, and on the date that you decide to take it out, you would just put, say, minus $10,000 in column Q, whatever you decide that you're going to take out. But the personal trading plan will continue to forecast for you what your total income would be over the course of a 12-month period. So we're pretty excited about this combination of the adaptive entry system as well as the personal trading plan. If we go back to the averages, you can see, start to scan through here. There's information here about the average number of trades. There's information about the average win-loss ratio. You can see what the average point production is on a daily basis. Now this is almost 50 days of data. Now we're still continuing to build the data, and we've got a few categories down here that we are in the process of researching and going back and installing that data in our tracking tool so that we can really have a full, complete picture of what's happening. So one last thing I want to talk about here is here's the tracking tool, okay? And we already know that the daily summary shows us that we did 53 points on trend bias trades. We did 29 points on all signals, but there's one signal that's not included in either of those. Nothing that we haven't talked about in the live trading room, but we are just now starting to track it, and once we develop an experience rate with it in terms of actual data, we will start including it in these categories. And that is fractals. So I'm coding them on my spreadsheet here. Some people have asked, what's the F? Well, that's indicative of the fractal signals that we're taking, we talk about in the live trading room. So what's very interesting to me is 53 points taking trend bias trades and continuation trades, and 29 trades taking all signals before noon. Well, fractals from 9:30 to about 4 o'clock produced another 60 points. So when you take a look at the trend bias and continuation trades at 53 points, and then if you were to add to that, if you took all the fractals, another 60 points, I mean, that is a huge difference. That's a huge increase. So as we take a look at these factors and these signals in all aspects of this, I personally believe that what we are showing and what we're reporting here is a conservative estimate of what you could accomplish. It all depends on what you want to trade. If you're only going to trade the trend bias signals, it's going to be less than that 53. If you're going to trade trend bias and continuation, it was 53 points today. If you're going to trade trend bias, continuation, and fractals, well, it's about 113 points. So, take 10% off of that and say it's just around 100 points. Take 10% off because there's always slippage. You have a slightly different fill than we're tracking, but it's about 100 points. Frankly, if you were to take 100 points or even 80 points or 70 points and plug it into your personal trading plan forecast, I think you're just going to blow your mind as to what you could possibly accomplish. So I'm going to leave you with this thought. The adaptive entry system is by far one of the most powerful trading tools you could ever want to have. As we continue to develop and share this data with you, as we continue to track it, record it, and analyze it, and share it with you, you'll start to understand that the opportunity isn't just 10 points a day or 20 points a day. You might be happy with that, and that's fine, but there is far more opportunity that exists. So when we start factoring in the fractals, which we won't do for a while, but I just wanted to share with you today what it was. When we start factoring those in, I think you're going to be pretty delighted because there's just more upside potential. So that's the conclusion for today. And again, I sincerely appreciate your interest in trading along with us. Appreciate those of you who are part of our live trading room being here. And we will be back again tomorrow with another day of trading, last day of trading for the week. Thanks, everyone.